Well, let's get away from the politics now and get an expert analysis from Gigi Foster. She's the economics professor with the University of New South Wales. Good to talk to you again, Gigi. Is this a risky move by the bank or a welcome soft landing, as Jim Chalmers describes it?
Well, it's certainly going to be quite welcome to many customers of bank mortgages, and you saw some of them picketing, in fact, in front of the RBA today. There's been a lot of political lead up to this decision, and I hope that Michele Bullock is not just responding to that pressure. I do think this would have been a bit of a knife-edge decision for her, and you can read in the statement, indeed, that she's forecasting that it's not going to necessarily be the case that this is the first of several rate drops this year. And I think that's very wise. As you know, last time I came on your program, I said I didn't have a crystal ball, but I was picking that she wouldn't lower rates and that we'd still be at 4.35% today. But I think there is one thing that has happened since that interview, which, as I recall, was the 29th of January. So we had the inflation data then, something that we didn't know then, and that's basically the pace of change in the United States new administration. There has been a lot of real action there by the Doge people, by the those in charge who are displaying rampant government corruption and expenditure on nonsense. And I think that there may be a sense in the RBA that that kind of uncertainty and disruption may percolate somewhat to Australia. And if uncertainty is something that causes people to be hesitant in making investments and spending choices, then that could be a bit of a cold shower on the economy. And so this rate cut kind of goes in line with that type of expectation as well.
I suppose the election factors into that as well, because people traditionally economic activity tends to die down a bit during elections, during that uncertainty. So there's 5 weeks coming up of a federal election when people might be a little bit stingy.
That's true. And also, don't forget, we're after the big holiday season when people will have tried to give their children a happy Christmas and maybe now are trying to pay off some debts. And so there's always a bit of a decline, quite a significant decline in consumer spending after that big bust kind of period. So, there are reasons from a seasonal standpoint to expect that over the next few months we might see a bit softer real economy action. But I don't think it's just about that. I mean, you can also see that the RBA is looking at the employment figures. They're worried about productivity. They're looking at all the indicators they should be looking at, and they're conscious of the possibility that even if in the long run, the kinds of actions that are happening in the U.S., if replicated here, would be good for the increase in quality of life for Australians that you were just speaking with Angus Taylor about wanting. In the short run, there still is going to be disruption if we start doing that kind of cutting, at least as much of a slash and burn type approach as being taken in the US. And we don't really know what is going to happen, particularly after the election. For example, if we do have a change in government, is there going to be even more of a desire to follow in line with what the US is leading the charge to do here and cut government expenditure?
Yeah, we need a Doge here, and we need to focus on productivity, obviously. I'll get you back on soon to talk about those big questions, because we have so much money going into unproductive parts of the economy and our productivity is going backwards. Great to talk to you again, Gigi. Appreciate it.